Hi there, welcome to Kneppy Invest and welcome to another technical update video. This morning I woke up, one of those rare occasions that I was not feeling 100%, and there is a motto within the running community. If it's in the chest, take a rest. If it's in the head, go ahead. So if whatever you're feeling is in the head, so a very slight head cold, I think I went for a run because it's not in the chest. So went for a run, feeling okay, maybe 90 to 95% fine. It's rare that I get sick, and I think the last time I got sick was maybe 5 years ago. Yes, even during COVID-19, I did not get COVID unless I was one of those people who had COVID and had no idea. And I think one of the reasons why I don't get sick all that often is I try to limit my mingling with people. And for those people out there listening to this who are parents, who have kids, you probably know that your kids tend to get sick a lot and they tend to bring illnesses, bugs, bacteria back home with them from school. So you tend to get sick a lot as well. And to be honest with you, that's the way it's supposed to work. Now, I'm not an immunologist or anything like that, but the reason why kids get sick is because they're more susceptible to getting sick, and it really increases or enhances their immunity for later in life. Now, again, I'm not an immunologist and I could be completely wrong, but I think that's the way it works. Now, this video is not about me talking about my health. Now, if you want me to record a video on that, you're out of luck. I have no intentions of doing that. So let's get stuck into the whole reason I am recording this video. It's looking at charts. It's a technical update video. So what I'll do is I'll look at some indices, commodities, Bitcoin, bonds, and then we'll have a look at some individual companies' charts. Haven't quite decided what companies I'm going to look at yet. I do have about 10 in my watch list. And some of these companies are some of the biggest companies on the ASX, including Rio, BHP, Woodside, also have Bellevue Gold and Credit Corp. Now, some of the reasons why I've included the companies in this particular watch list is not for technical reasons. Share prices of these companies, and in fact, the charts look pretty bad, but the share prices have fallen to the point where I think that maybe there's some value in these companies. Yeah, so BHP, Rio, Woodside, Bellevue Gold, Credit Corp, I think released their results a few weeks ago. Share price bounced and it's pulled back. And I do like how the management were enthusiastic about the future, the next few years about that company. So I'm thinking there could be some value in Credit Corp as well. So those companies are listed in this watch list not because of technical reasons. So I was thinking maybe I shouldn't look at those companies in this video. So I was thinking instead of maybe going through those companies on the ASX that are at a 6-month high. I don't think there's going to be many. In fact, I would be surprised if it's over 20. In fact, I could look at it right now. Let's have a look at it right now. So I do have it up. It's at 19. So I might go through that, go through the companies that are a 6-month high. And then if there's not many, because that 19 probably includes quite a few really small companies that I don't want to have a look at. And if there's not many companies I want to have a look at in that particular screener, then I'll have a look at some of these other companies I have included on this list, including Boss Energy. Yes, Boss Energy's share price has fallen a fair bit, just like a lot of the other uranium stocks on the ASX or uranium companies. I do know someone gets really upset when you say stocks instead of companies. I have a feeling it's Scott Phillips. Yeah, he says it's companies. You're investing in companies, not stocks. But anyway, it's the same thing, stocks and companies. Anyway, actually, yeah. Now I was reading a book this morning, not a textbook, a book, and they did actually say there is a difference between stocks and companies. So maybe there is a difference. So investors call it companies and traders call it stocks. Maybe that's the difference. I don't know. I have no problems with you calling or interchanging between stocks and companies. I am not that pedantic. Anyway, so let's start with looking at the indices, starting with the XJO. Oh, I'm already there. Anyway, so this is the weekly chart and a down week, but it could have been worse. Down about 2%, if I remember correctly, down 2.1%. Now that includes Monday, which was down 3.7%. So we had a nice bounce in the last 4 days of trading, particularly on the Friday session. Friday was up about 1.2%. So 2 nasty days, last Friday and then Monday, and that is it. Is that the it, or is that it for this little correction? Maybe, because when you do look at the daily chart, still in an uptrend. And if you look at the weekly chart, still in an uptrend. If you look at the monthly chart, still in an uptrend. And in fact, if you do look at the monthly chart, you can see that the XGO has been trading in this channel for about 15 years, only been up above or below the channel twice, up above it for maybe 1 or 2 days and below it during the COVID-19 financial panic. And if you do look at it, we were near the top of the trading channel at the start of the week or the end of last week. And now we're not quite in the middle of the trading channel. So I believe the channel is right now between 8,200 and 6,800, which means the middle of the trading channel would be towards about 7,500. And right now we're 7,777.7. Really? 7,777.7. Didn't realize we're at that really interesting level. Well, there you go. A really interesting number. So we're in the middle, we're in the top half of the trading channel. Now, if we're near the top of the trading channel, I'll probably be tending to be a little more bearish. If we're near the bottom of the trading channel, I'd be a little bit more bullish. Now, we very rarely get to the bottom of the trading channel. We've been at there almost 6 times in the past 15 years. So every 2 or 3 years we get towards the bottom, and right now we're towards the top. So the bottom again is around about 6,800, 6,700. So a long way to go from here. If we do see a bit of a bear market, that could be the bottom of the SEO if we do see a bit of a bear market. Okay, so I am not ultra bullish, ultra bearish when it comes to the XJO. Now, for the XSO, this is a little bit different. Now, I did listen to this podcast this morning. It was a really interesting podcast. It was, I think it was Rask, and they were interviewing Airleaf small cap fund manager Will Granger. And Will Granger just said something really good because he's a small cap fund manager, and they're stock pickers, and they do outperform the market, particularly excess. So he did say something that was quite relevant when it comes to small caps. He said there's a lot of junk in the small cap indices, a lot of concept stocks, story stocks, and what they do is they try to pick companies. And I do think the small cap sector is a stock picker market. You can do really well if you're a really good stock picker. And I actually do believe that. And ideally, you want to significantly beat the small cap indice or the small ordinary indice, which is the XSO. And in fact, the XSO has significantly underperformed the market over the past 15 years. In fact, the record or the peak for the XSO was back in 2007, still yet to get to those levels. And again, what Will Granger said, the small caps or the small ordinaries index is full of crap or full of junk, I think is the word he said. And I think he's absolutely right. If you're able to push aside all those junk companies, there are some absolutely brilliant companies in the small ordinaries index. I know. When you do have a look at the small ordinaries index, remember it was a few weeks ago, there was this talk about this great rotation from the bigger companies into small caps. Well, that has not happened, has it? In fact, the small ordinaries looks really weak. In fact, it's fallen below a support level. Yes, this is the first time I actually haven't looked at this. And we did see almost the low point for 2024 during the week. Yeah, the low point was actually in January, and we almost got to those levels again. So it looked like the XSO was about to break out, but not really so. So this thought of there being a great rotation into small caps has not really happened in Australia, but that's okay. A lot of my small caps have done okay, but a lot of them were sold off during the week. And that sort of makes sense. When there's a little bit more fear in the market, what you will find is a lot of people sell out of their small caps, those high risk companies. And I did see a fair bit of that on Monday. Not as much on the Friday, but definitely on the Monday. And some of those companies have not recovered yet. And this sort of makes sense because the XSO has not really recovered all that much. Did go up a little bit on Friday, 1.85%, but still hasn't really recovered from those two really big down days. Now on to the American indices. We'll look at the NASDAQ, the Russell 2000, and the Dow Jones. In fact, I'll start with the Nasdaq. Go to the Dow Jones, and then the Russell 2000. So Nasdaq, we've seen a pretty good bounce. In fact, the weekly chart looks really interesting. I think this is a possible bounce, and we have seen a low at the Nasdaq, and we are in an uptrend, or the Nasdaq is an uptrend, and we have seen the Nasdaq pull back a few times in the past year and a half. So the first time was in the latter half of 2023. The Nasdaq did go down for a few months, and the bottom was in October. We saw a little bit of pullback back in April. The bottom there was on the 19th of April. But if in this pullback, possibly the bottom was on the Monday. Now, if you look at the weekly chart, you can see at the bottom, or the week after the bottom, there was a really good week on the Nasdaq. So in October, the recovery week, I'll call it, was the 30th October week, and the Nasdaq was up 6.5%. And then the recovery week in April, the Nasdaq was up 4% in that week. And this particular week, it was flat. But during the week, we saw a significant recovery. In fact, the Nasdaq went from 17,500 to 18,500. So it was only on the Monday that they saw weakness. And even on the Monday, the low was in the first few hours. Yes, first few hours. And during the rest of the week, we saw a pretty significant recovery in the Nasdaq. So I think the following week is going to be really important. This could be the bottom. Maybe we've already seen the bottom, and the Nasdaq could go on a nice little rally from here. Or if we see further weakness, we might see continuation in this little bit of a downtrend. Now, the important levels for the Nasdaq, and this is just based off this weekly chart. So what I'm doing is during the highs we saw back in 2021. So the Nasdaq has gone above those levels. It took a few weeks to get above those levels, which makes sense. And if you just draw another line at the most recent low right there, so this was back in April. So that zone there, that's very important. I probably could draw a triangle. In fact, I might just draw a triangle instead. Let's do the triangle. It's a fairly small triangle, and I'd call this a support zone for the Nasdaq. If I see the Nasdaq falling below that zone, that would be ultra bearish. So the bottom of that zone is around about 16,500. So the Nasdaq right now is well above that. So a lot for the Nasdaq to move for me to be bearish for this particular indice. Otherwise, I still think the Nasdaq is in an uptrend. Dow Jones, this is the weekly chart for the Dow Jones. Nothing of concern here. An okay week. Recovery week, still down for the week, down 0.6%. But overall, if you do take the longer term picture, Dow Jones is in a nice uptrend. If you have a look at the daily chart, nice recovery, just like the Nasdaq, and possible, you could probably say and argue that it moved into a support zone. It's now running higher. So it's bouncing off the support zone, which it looks pretty good. You probably could also maybe draw a bit of a line there, like there. I reckon, yeah, and say I'll put that up there. Now I'll get rid of that. So that's maybe the trend, or my mouse is going to run out of power soon. So I'm just going to connect my mouse. I hate these connected things. I know, so that's the Dow Jones. I still think the Nasdaq and Dow Jones look okay at this point in time, but still got my eye on it because of potential weakness in the American economy. Now let's have a look at the Russell 2000. Again, this goes back to this thematic, this belief that there was this great rotation. This was a few weeks ago, great rotation. You can sort of see in the Russell 2000. The Russell 2000 went on a bit of a tear. This was back in the middle of July, and then it's fallen now below the start of that tear. So a bit of a correction. And I think it was, someone said something really funny. I think it was Baby Giants, might have been Claude Walker, said the bull market for the small caps lasted about 2 weeks. And that seems what the chart sort of seems like that. Nice little period there for the small caps in the United States, but back to normality for that particular index. That's the daily chart. Weekly chart, nothing much to talk about. Potential breakout, and it's failed. Back below this little resistance area, which is around about 2,100 or so. So still weakness in the small caps in America and also Australia. So it's all about the bigger companies, really. Anyway, so that's the American indices. Now let's have a look at some international indices, starting with the Nikkei, because all the talk during the week was the Nikkei. So this is the weekly chart. And to be honest with you, the weekly chart, the Nikkei was down 2.5%. But if you do look at this 1 week candlestick, it's sort of like a doji in a way, but the doji, the body is not in the middle, but a very long shadow or tail, which tells me a lot of buying came in during the week, which is understandable. So let's have a look at the daily chart. And we can see the massive bad down day on Monday. The Nikkei was down 12%, but then the next day it rallied 10.23%. So this definitely looks like a bit of, I wouldn't say panic selling, but that was just a 1 day sell-off. That's what I think right now. It started really a few days before that. So it really started on the Friday, possibly even a Thursday, because on the Friday it fell 5.8%, but it really capitulated on that Monday. And I'm going to call it capitulation on the Monday and a nice V-shaped recovery since then. But if you do have a look at that, this could be just a dead cat bounce. So I think the next few weeks for the Nikkei is fairly important as well. And that could, in any further weakness in the Nikkei, could lead into further weakness in international markets. Waits to see. But I wouldn't be surprised to see the Nikkei has already reached its bottom at 31,500. Hang Seng, in fact, the Hang Seng, it's in a down. This is the weekly chart. It's in a downtrend. I'm going to say it's in a downtrend. Possible. I was just thinking you could draw. No, not quite. Doesn't really match up, does it? You could draw a line like that and ignore here, but that does line up a couple of little peaks. But anyway, so yeah, Hang Seng doesn't look all that strong. DAX, I would be assuming DAX had a. In fact, DAX might have been up for the week. DAX was actually up for the week. There you go. Down 4.1% last week, up this week, which a nice little bullish 1 week candlestick. When you ever see candlesticks with long tails or shadows, that's bullish on the downside. That's bullish. When you ever see above the main body, that's bearish. So when you see the long shadows below the main body, that is telling us there's a lot of buying coming in, propping up, a lot of enthusiasm among the buyers. Another way to look at it is when you are buying or selling, you can buy on market or just put a bid in. And when you do see more enthusiasm in the buyers, people are buying on market. When you see a lot of enthusiasm among the sellers, like we just saw on Monday, people are just selling at market. They don't care what price to sell at. They just have to sell. They sell at market, and that does force the share price to decrease. If you sell on market, you are decreasing share price, because if you have, say, 10,000 shares you need to sell, there's only 5,000 shares at, say there's the share price of a company is at $1, and there's only 5,000 shares, there's a 5,000 share order at $1, and you need to sell 10,000 shares. You sell on market, so that 5,000 shares at $1 gets taken out. But below that, maybe 99 cents gets taken as well, maybe 98 cents. So when you do sell on market, you do put pressure on the share price. When you buy on market, you put pressure on the share price upwards. And that all relates back to the enthusiasm. If you need to sell or you need to buy at market, you do put pressure. That's what I refer to when I'm talking about enthusiasm. If you are just putting bids in, that's not, you're not as enthusiastic. Anyway, and on the big down days, people just are so fearful. They just dump their shares on market. Anyway, so it's the DAX, the UK or the FTSE, almost flat for the week, down 0.08%. Nothing, in fact, if you look at the FTSE, nothing to really talk about. The weekly chart for the last forever, it's just nothing to talk about. Just grinding slowly higher. You can definitely see during COVID-19 just collapsed, and ever since then just been grinding slowly higher. Anyway, so that's the indices I want to have a look at today. Now let's have a look at commodities. Gold should have held up true during the week. So you would think if there's a bit of fear, a lot of money would have been into bonds and gold. Maybe not Bitcoin. We saw a little bit of a different response to Bitcoin, but gold has remained solid during the week, down slightly. A little bit of volatility in there, but down slightly, 0.5%. They did have one big down day, which was that. So it was down a little bit on the Monday, but overall, the charts for gold look pretty good. And quite a few gold companies did sell off. And there was a little bit of discrepancy between gold stocks and gold prices. Maybe that has something to do with currencies. Maybe the Australian dollar moved, which makes sense. The Australian dollar moved a little bit, was a little bit higher than the American currency. In fact, I never have a look at currencies, do I? Currencies. Is there currencies in here? US, Aussie dollar. Let's have a look. I've never. There we go. No, there wasn't much of a movement. There was a big movement on Thursday, up 1.15%. I probably should look at this a bit more often. I do know a lot of traders, day traders, love currencies, but I've never ever looked at currencies as something to trade. Currencies aren't investments, just like Bitcoin's not an investment. It's a store of value, really. Anyway, so I'm going to put this into my markets and technical video. Maybe I should look at currencies a little bit more. Let's have a look at the weekly currency. Yeah, in fact, if you look at the weekly currency, it's been on a really sort of 12-year downtrend. Anyway, let's go back to commodities. Gold. Gold still looks pretty good. I mean, can't really say anything bad about gold right now. The weekly chart looks nice. It's near all-time highs. So, yeah, nothing to complain about gold. But some gold companies look more interesting. I was looking at Bellevue Gold in my answer reply video, and someone did ask about it. And the share price of Bellevue Gold is now at support level. If you look at the daily chart, because of the capital raising. And yeah, there's a big discrepancy here between Bellevue Gold and the gold price. And I have seen this on a few other gold companies' charts as well. Excuse me for that burp. So let's have a look at gold companies right now. So let's have a look. Evolution Gold. So not really doing anything. In fact, Evolution Gold has not done anything for ever. So there could be value there. Northern Star, slight uptrend with Northern Star. Perseus has pulled back a fair bit in the last few weeks. It's gone from $280 to $240. What about Red 5? That's had a pretty big pullback over the last 2 months, from 50 cents to 34 cents. Ramilius not really doing anything. Long-term uptrend there, though. Regis has fallen a fair bit. Resolute, actually, Resolute looks okay. One company that does look okay is Capricorn. Where's Capricorn? I did have a look at here. Capricorn looks pretty good. In fact, Capricorn should be on my, or should be on the 6-month high screener, because this chart looks actually really good. So it looks like a lot of enthusiasm for Capricorn and metals. And of course, I missed a lot of other companies, lots of other companies here as well, but because there's heaps of companies in my gold watch list. Anyway, let's go back to, where is it? Commodities. So we've talked about gold. What about silver? So silver looks much weaker than gold, and there should be a bit of a correlation between the two. So if I was thinking of maybe buying gold versus silver, I'd be more attracted to silver right now. There is one, or there's a few silver companies, but Adriatic Metals has fallen like, it's collapsed. I haven't been following this company, but I did have a look at the chart for this company the other day. Share price of this company has almost halved in the past 3 months, from almost $5 to $2.66. So something negative is happening to this company. But is the market overreacting? So Adriatic Metals has silver projects. I'm pretty sure they're in production now in somewhere in the Baltics, Croatia, Serbia, somewhere like that. But something definitely is happening to that company. Silver, there's a silver mining company as well. Silver Mines. What's it called? Silver Mines, SVL. Let's have a look at this chart. Yeah, nothing there to see either. I know. So silver looks a little bit weaker than gold, but to be honest, should it? Iron ore, $100. In fact, if you look at the daily chart for iron ore, it looks pretty weak, doesn't it? It looks like it's in a downtrend. It's getting very close to the lows iron ore saw back in April. And that probably explains why quite a few of the iron ore companies are looking really weak. So instead of actually, I'll look at some of these iron ore companies now, I suppose. So this is Rio. Now the interesting thing about Rio, which is the reason why I was going to talk about this company in my company specific portion of the video, is the share price is at an uptrend line. So I mean, this is the long-term uptrend. Now you can see it falling through the uptrend back in October. So someone's saying it's not really an uptrend because it fell through there briefly. But if you go all the way back to 2016, when there was a low in iron ore, whenever the share price of Rio Tinto gets to this uptrend line, you do see it rally. So it's there right now. But the share price has a very hard time getting above $135. Now iron ore is weaker right now, so who knows what's going to happen with Rio Tinto's share price. So I'll probably look at the underlying commodity first, then look at the chart, individual company chart. Grange looks weak. It's been looking weak for a long time. That's a weak chart. Mount Gibson looks weak, has fallen through support, fell through support a few weeks ago, down to 34 cents now. Fortescue has been looking weak, keeps on dropping. It's fallen through a support zone, down to 18.49. BHP is not in this list. That's ridiculous. Didn't realize that until now. I'm going to put BHP up there. And BHP is at an interesting level as well. This is possible argument that BHP has fallen through a support level, or the uptrend line. It fell through the uptrend line briefly during COVID-19, but you can see it's held fairly strongly above that uptrend line since 2016. Now it's fallen just below it. So it did fall below briefly in 2021, but every single time it gets close to that uptrend line, it bounces, except during COVID-19, which it fell through it on strength, but that's understandable. And the other one is Phoenix. This one has shown strength, but Phoenix did drop a fair bit during the week. I did notice that. It fell 14% during the week. So maybe a little bit too much enthusiasm in Phoenix Resources. And the daily chart, you can see that big drop. It wasn't on the Monday, it was on Thursday. It dropped 8.9% on Thursday. And possible buy the dip situation with Phoenix. We saw that back in June as well. Now, let's go back to commodities because I've gone off topic a little bit. And let's go through this a little bit quicker. What about uranium? Uranium looks weak. So this is a spot physical uranium. So I like this one over the uranium price because I need to look at the line chart with uranium, the weekly chart. I think it's the weekly. No, it's a line chart. So I just do like this. And this is a good proxy for uranium. And this looks pretty weak. It's moved into a downtrend during the week. And this explains why a lot of uranium companies on the ASX are looking weak. Their charts are looking weak, including Boss Energy. So I wasn't going to do this, but I suppose I should. So Boss Energy looks weak. Oh, it's just fallen. It's fallen to this level. I've had this level, $3 level for Boss, all the way back to 2021. So the reason I put $3 in for Boss Energy, and it's pretty clear, Boss Energy had a really hard time getting above $3 back in 2021 and 2022. We see it testing it 1, 2, 3 times. It finally got above that level in June 2023, and then really struggled for the next 3 months to get above that level. And finally, it really went on a tear from August 1 year ago. Share price went from above $3 all the way to a high of $6. And now, where is the share price for Boss Energy? It's now fallen below $3 at $2.94. And you could just see the last 5 trading days for Boss Energy, it's just been right below that level. So this is a potential bearish signal for Boss Energy. And the share price has fallen a fair bit. It's halved since May. So we're talking about 3 months. It's halved in less than 3 months. Anyway, maybe there's some value in some of these uranium companies, but the charts look pretty weak at this point in time. Okay, let's have a look at oil, down to $77. Yeah, it's actually, maybe I should have said that. Maybe it's up to $77 because it was as low as $72 during the week. But overall, I think I mentioned this, your oil, it just does nothing. It's just a bit of volatility in there, up and down like a yo-yo, no trend. Even if you look at the weekly trend, there's just no trend. And there's been no trend for a long time. So within the longer term trend, there's short term trends, but if you go back all the way to 2007, that's when the share price or the price of oil got above $75. Yeah, 2007. And since then, it's been oscillating above and below $75. So no trend in oil over the past 17 years. Natural gas. In fact, the weekly chart for natural gas looks weak. Lithium, nothing to talk about. Lithium still in a downtrend. Copper. Now we get to something interesting, or potentially interesting. Copper's had about 5 bad weeks in a row. In fact, about 3 or 4 bad months in a row. So in May, copper prices got above $5 briefly. Now they're at or below $4. So copper prices have fallen 20% in the past few months. And this could be, just could be, this could be an indication that the economy, or not the economy, that the market is a little bit concerned about the economies because, again, Dr. Copper, this is sort of a proxy for the state of the economy. And if you look at this, some people are pessimistic about the economies around the world, potentially the United States, or particularly United States. So copper chart looks particularly, or a little bit weaker now than it was not that long ago. Someone mentioned coal was breaking out, and it is. Coal's breaking out. Coal is breaking out. Yes, I think I forget who said coal's breaking out, and yeah, I'm looking at this and I'm thinking coal's is looking interesting. So possibly some of those coal companies on the ASX, Whitehaven, New Hope, Yancoal. I do have a coal. Actually, I don't have a coal watch list. So let's have a look. Yancoal, for some reason, is looking the strongest. The chart is looking the strongest. Not talking about the company. The chart looks actually really nice. Whitehaven is sort of neutral. I'm neutral with Whitehaven. It's fallen a fair bit, but there's no real trend in Whitehaven. And New Hope looking the weakest out of these three. Yeah, maybe not. I'd say this is neutral as well. There's a few other coal companies on the ASX that I haven't talked about here, but coal itself, this is Newcastle coal. Coal looks actually pretty good right now. This chart looks really good. Maybe now's the time to play coal. Tin, nothing much happening with tin. Nickel, it's just collapsed. It's been collapsing for a while, so nothing to really see here. Just gonna have a look at the line chart. Yep, it had a bounce, towards the end of July. That was 2 weeks ago. Palladium, let's go back to the candles. Palladium, still nothing to talk about here, still in a downtrend. And what about cocoa? A nice day on Friday. Cocoa up 7.7%. But otherwise, after that really strong uptrend, that really strong movement in cocoa in the first 4 months of 2024, a fair bit of volatility there. Exactly what you would see for a lot of stocks after a really nice uptrend, like DroneShield. I think we're going to see a lot of volatility in DroneShield in the next few months. Okay, let's have a look at Bitcoin. Turn our attention to Bitcoin and bonds. So I think there was a lot of chatter last week because on Monday, Bitcoin fell below 50,000. And there was a lot of people, I saw a lot of tweets making fun of Bitcoin or something like that because it fell through $50,000 and now it's above $60,000. So it's bounced, was that 20% in the week? Yes, Bitcoin has bounced 20% in the week from its lows. So this was sort of a false breakout with Bitcoin. Fell below 55,000 for a brief period, and now is back above that level. Again, the level I'm really looking at for Bitcoin is 74,000. If Bitcoin could get to 74,000, that would be a significant move, but we're well away from that. I would assume Ethereum, probably a little bit weaker than Bitcoin, which makes sense. So there was a descending triangle here, and it fell through that on last Sunday, and has not recovered. There was still a nice day on Thursday, but yeah, it's still below the bottom of that descending triangle. So this could be a bearish move from Ethereum during the week. And now let's have a look at some bonds. Start with the US 30. In fact, we'll only look at the US 30. And we had that really big down day on Friday. So US bonds was down 4% on that day. On the Monday, sort of a doji, one day doji candlestick. So that's like a fight between the bears and bulls. Just don't know which way it's going to go. And then the bulls won. So 3 up days in a row after that, and then a negative day on the Friday. But overall, or holistically, bonds look, or the 30-year bonds look a little bit weaker. Look like they're moving into a down trend, which means the TLT ETF is looking okay now. Really good volume coming in the end of last week into start of this week. So this is starting to look a little bit better, the TLT ETF. As bond yields go down, bond prices go up. This should be your vehicle of choice if that's what you want to play, or one of your vehicles of choice if that's what you want to play. Now, onto the individual company portion of the video. So I did have or include Paragon Care, Boss Energy, Alliance Aviation, People In, Rio, BHP, Beamtree, Woodside, and Bellevue. We'll have a look at a few of these companies, and then we'll have a look at the top. Actually, no, what we'll do is we'll start off with the top. We'll have a look at those companies that are at 6-month high on the ASX. Only 19. And fun enough, at the top, and this is ranked by market cap, and the first company is AMP. So I did take a position in AMP after they released the results, and the results were okay. And fairly, I'd say, bullish commentary from the management about the outlook. And I do think that's one of the reasons why the share price bounced higher, increased about 10% on the day. I think it might have been 14%. Has remained strongly in the resistance zone. Briefly went above the resistance zone. I would have loved it to see the share price close above $1.30, but it closed at $1.29. So I do think there is potential. This could be a move. I'm not saying this is going to be a company you want to invest in for the long term, because AMP over the last 20 or 30 years has been probably the most disappointing company on the ASX. It went from being a blue chip company you can't lose in to being an awful investment. In fact, if you look at the monthly chart, you can't even see my support zone or resistance zone because it's overwhelmed by how much the share price has fallen. In fact, back in 1998, the share price was as high as $36. Now it's $1.29. So this is definitely not a long-term hold for me. It's just there's a bit of momentum. Chart is starting to look okay for this company, and it was on the back of good financial news. Another company, Paragon Care. I'm pretty happy that it's in here. Paragon Care had a really interesting week. So I'm trading this company right now. So on the Monday, the share price went as low as 38 cents and then finished or closed the day at 43. Can you just imagine? You sold at 38 cents because, again, on Monday, a lot of fear, people selling on market. So someone probably dumped their shares on market for this company, and they sold at 38 cents. And then the share price recovered almost straight away, closed at 43 cents. But on Friday, the share price went to a high of 50 cents and then closed at 44. So we had two signals here. So on the Monday, it was fairly bullish, a lot of buying coming in. And then on the Friday, a lot of selling. As soon as the share price got to 50 cents, we want to sell. We want to sell on market because the share price is at 50 cents. So a really interesting week. But the other thing this shows us is volatility. So in this one company, we saw the share price range between 38 cents and 50 cents. In fact, if you have a look at the weekly chart, you can see the 1 week candlestick extreme between 38 and 50 cents. A lot of volatility. If you go back through or previous to that, very little volatility. So there's a good week on the 6th of May, share price ranged between 32 cents and 36 cents. That was a pretty volatile week in terms of the range of share price. So this just shows you that when there is uncertainty, when there's a lot of volatility in the overall market, share prices of companies can be quite volatile as well. Paragon Care is a great example. And this is also a sign of a bear market. A lot of volatility or more volatility. You tend to see more volatility in bear markets than bull markets. That's an absolute truth. There is that saying. What is it? That saying that in bear markets or bull markets, the market just grinds slowly higher. It climbs a worry or war of worry or something like that. But in bear markets, because fear is much more powerful than greed, where people are fearful, they just sell on market, got to sell on market. But in bull markets, I don't think people necessarily buy a market. I think they're a little bit more patient because, again, fear is much more powerful than greed. We saw that on Monday. People just selling on market. People willing to sell their shares at 10% lower than it was a previous day. That is fear driven. There's no reason behind that. Anyway, so that's Paragon Care, a really good example of a bit of volatility in the market during the week. What else do we have? Alliance Aviation. This is complete opposite. This is lack of volatility. In fact, the share price of this company has been going sideways for a few months and trading between $3 and $3.20. In fact, the other thing I've got here is you can see a lot of crosses. These crosses are when the moving averages are crossing over. And when you see a lot of crosses over a short period of time, that means the market's doing nothing. It's going sideways, or the share price is going sideways. Now, in times of really low volatility, so if you put a Bollinger Band on this, the Bollinger Bands will be squeezing together. That's a sign of lower volatility. And the belief is that when you do see lower volatility, eventually the volatility will just explode. So eventually we're going to see an increase in volatility for Alliance Aviation. But which way is it going to move? That's a big question. So this could move up, move higher, and that would be a time to get in for maybe a short to medium term trade. So here is a case of a low volatility. And usually, again, low volatility comes before higher volatility. And usually you'll see a bit of a bounce. I do know some traders who just look at Bollinger Bands, and when there's a Bollinger Band squeeze, they get excited because they know when there's a squeeze, eventually it's going to erupt. And what they'll be looking for here is maybe the share price breaking out above 320, and they will go, maybe not all in, but they will put in, maybe buy some shares. Anyway, people in, this is another interesting example, a really good example of support, resistance, and whole numbers. Now, I have talked about this company in the past, and I took a trading position in people in back in December last year, a really good volume coming in when the share price hit $1 on the 11th of December. Share price bounced. In fact, the bounce went from $1 to a high of $1.40, which was in February. I did not sell at the high. I sold at a 20% bounce. I find it really hard to absolutely time bottoms and highs. This is a case where I just was happy with a 20% bounce. It happened. And then the share price dipped back towards $1. It remained above $1 for about 2 or 3 months between February and April. And then lo and behold, it fell below $1 on the 24th of April and just kept on dropping. And then we saw a bounce in people in. Share price got as low as 70 cents on the 7th of June. And then share price bounced. Where did the bounce last to? Where was their resistance? $1, which makes sense. Share price of people in had a hard time falling below $1. So $1 is in the minds of all the traders. $1 is significant for this company. It's also a round number. Round numbers tend to be more significant for traders and even investors. And the share price of people in, it got to $1. It had a really hard time getting above $1. It tried to over a 4-day period between the 10th and 15th of July. It failed. No volume coming in. We need the volume. We need volume for the share price to get above $1 because we will see people sell at $1 because it's a round number, particularly because it bounced from 70 cents to $1. Now, what's the share price done? It's fallen from $1 back to 70 cents. Well, 75 cents right now. So this just shows you how round numbers are important, how resistance and support numbers levels are important as well. So people in has hit or has had trouble rising above $1. Round number, resistance. Okay, we also have Rio Tinto, BHP, Beamtree is interesting, a potential breakout here. It also has crossed over, moving averages have crossed over, so sort of breakout. They also released some good financial numbers. So definitely a company to put on your watch list. Beam Tree. I do not have a position in that company. Woodside has fallen through below support, but I think there could be some value in Woodside. The further it falls, the more value I see. But again, it's a mining company, and I always have problems seeing value in mining companies. But it's Woodside, and it's at multi-year lows. Last time the share price was this low was back in early 2022. So we're 2.5-year lows with Woodside. And the other thing is so much chatter when it comes to Woodside. I was listening to one of the podcasts, Gemma, what's her name? Gemma Dale she's a NAB trader, and she knows what retail investors are buying. And she just said, I'm pretty sure she said the other day that a lot of retail investors are buying Woodside. And the question I have, if a lot of retail investors are buying Woodside, then why is the share price falling? So it could be a trap right now for Woodside. I don't know. The other one was Bellevue Gold. So it's that nice support level. I think I've already showed you Bellevue Gold. And Credit Corp. So Credit Corp released the results a few weeks ago. A really nice bounce on the day. Share price rallied 14%. It looked like it could be a breakout. And this was the case of where I just followed the movement in the share price following days. I wasn't convinced it was a breakout, and the share price has pulled back. But I am a little bit more bullish on this company moving forward. Not my favorite sort of company, debt collector, that sort of thing. But the chart actually doesn't look that interesting right now. But I was hoping that was going to be a breakout, but not quite there. Other companies at 6 months highs. Catapult. Funny enough, the first 4 companies on this list are companies I'm trading. Catapult bought $1.79. So this chart looks pretty good, and the share price did get to not an all-time high, but a very long-term high. Last time the share price was this high for Catapult was way back in 2021. So 3-year high for Catapult, but the chart looks pretty good. My initial position in the Catapult was at 99 cents. Then I took profits, sold at about $1.20, and I should not have sold. Don't know why I sold. So that's Catapult. Janus Plus, I'm bullish on this company. I think I've already talked about this company. No reason to talk. A long-term high, all-time high for Janus Plus. Oh, and another company I'm trading is Shape Australia. So even though there's overall weakness in the market, that did not affect Shape Australia. Share price just keeps on grinding higher for this company. And here comes a company I don't or am not trading, Turaco Gold. I don't know anything about this company. Share price broke out in November. There it is. So on the breakout, share price was about 9 cents. And this was a nice breakout. Share price did not get lower than that day. This is a good example of a breakout that has power, that is long lasting. So you could have bought it at 9 cents, and now the share price is 25 cents. So a nice little almost 3-bagger for Turaco Gold. I don't even think this company's on any of my watch list. No, it's in none of my watch list. Bit of a sneaker stock. I don't even know what they do. Market cap is 188 million. I've never had a look at Turaco Gold. There you go. Keypath Education. No, it looked like there's a takeover bid for that company. Corvests. I was almost a shareholder of this company. I almost bought it 10 cents a few weeks ago. I thought, the share price might pull back. It hasn't pulled back. Now at 10.69. That's when I was getting a bit too cute. Rimfire Pacific, a company with market cap of 121 million. This chart looks pretty good as well. What does the company do? Except they're mining company. And the breakout for this company was back in November again at around about 1 cent. Now the share price is 5.3 cents. A 5-bagger over that period of time. And look at the volume as well. Now I didn't look at the volume with Turaco, so let's go back to Turaco. Yes, a really good volume coming in November. Haven't seen expansion of volume, so that's a little bit of a concern. But with Rimfire, yeah, we saw some really good volume coming in between October, December, and January, and we're starting to see increasing volume in July and August, and the share price has really taken off in the last month or so. So Rimfire Pacific, this is another company I haven't really been following at all. So it just shows you there is so many possibilities on the ASX when you do use technical analysis. Terramin Australia. No, we'll move on to the next one. Amplia Therapeutics. Oh yeah, I think I've mentioned this company maybe once or twice. It's taken off. Red Sky Energy. No, move on to the next one. EVZ. This was, they released a contract. Share price went to 22 cents and has pulled back to 17.5 cents. So this is not a breakout for me. Some really good volume coming in the last 3 or 4 months. Compare that to the last few years. So there's a little bit of interest in this company. And maybe those who believe that volume precedes price, maybe that could mean EVZ could go higher from here. Hammerland Gold. Now we get to market caps of 18 million. So, this looks interesting, potentially interesting for Hammerland Gold. Put this onto my watch list. AU Make. Whoa, what's happening there? Pretty sure this is a Daegu or something like that. In the short term, this does look interesting. Yeah, forget rid of this and this and this. Share price going sideways for a long time. Share price still below 0.1 cents. It was 0.2 cents not that long ago. So this has been a four-bagger in the last month or so. I don't know what's happening with this company. I've been ignoring it because share price has been below 1 cent, but maybe that was to my detriment. And Cape Range. No interest. Australian agricultural projects. Not interest. Vonex, there's a takeover bid for this company. You can just see that in the chart. Energy Action. Just all over the place for that company. No interest. Now we're getting to market caps below. Oh, that's the last. So 19 companies on the ASX at a 6-month high. And funnily enough, I did not realize it until the first 5 companies I'm trading right now. There you go. Okay, so that's all I got for today's video. If you have any questions, any thoughts, you can leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.